This is the trading style, the trading strategy that changed my life. So some of you guys have been asking me, how do I catch sniper entries? I'm going to show you guys how I was able to catch a beautiful sniper entry, no drawdown whatsoever. And look, I'm not saying this is going to happen all the time, but when you're able to combine this with the TTTM style of trading, there are going to be times when you are able to catch sniper entries if we just utilize these few concepts that I'm going to be showing you guys today. The trading question was this Euro USD trade. It was a sniper entry, a buy entry, and it was just a beautiful trade. But before we get into how I actually caught the trade, we need to understand the theory behind the trade. This is when I bring out my trusty whiteboard to explain to you guys what on earth is going on. So first off, this is the TTTM style of trading. We're going to be trading towards the money. We don't just jump into a trade because price is going up. That's what we used to do back in the day. That's not what we do. When the market opens up, normally it's going to go sideways like this. This is basically consolidation. Consolidation is when price is moving sideways or a ranging market. And the whole agenda behind this is that they're generating liquidity to run it later. They're generating liquidity on the top side and they're generating liquidity on the bottom side. So if you see something like this, always expect some kind of manipulation. See, what we were taught is if I was bullish and I saw price break above like this, I'm going to look to jump in with a buy right here and take it up to the upside. Guys, this rarely works and it's not something that you can bank on. I'm of the mindset that when we're bullish, I'm going to see price drop first before rising up like that. So in other words, what's happening? We're dropping first. We've generated liquidity beneath this low and this high. There's money on both sides. So if we drop first to take out the money down here, that means where's the rest of the money? The money's up here. This is why we aim to get in somewhere near these lows. It doesn't have to be near these lows. It can be anywhere, even when price is moving up. But we're looking at catching sniper entries, so basically minimal drawdown entries. The reason there's a drop here is because when price drops down, what happens? Every single person who's buying gets stopped out of their trade because their stop loss is going to be in this area right here, in this area right here. That's where the stop loss is going to be, in this area here. And when they're stopped out of their trade, they actually sell their orders. So in order for them to get out of the buy positions at this price, let's say the price is here, they need to sell their order back. This is why your stop loss for those who are buying is actually a sell stop. But you have to remember this, for every single trade, there must be a buyer and a seller. And so that means if you're going to be selling your trade here, these people who automatically selling because they're being stopped out, there needs to be people buying here. This is why we will be buying at these lows, pairing up with their orders, their sell stops with our buy entries. And then we take it to where there's willing participants who want to take our trade higher. So what do I mean by that? So above here, there's going to be buy stops because everyone who's selling from here, thinking this is a resistance zone, they're going to have stop losses in this area now. These are pound signs, by the way. I know this was a mashup, but yeah, these are pound signs. And so when we take this buy position, we're going to ride the waves. It could be, this won't look like a straight line. Sometimes it'll be like this. It'll be like that, little ups and downs. But for the sake of this video, let's keep it nice and clean, just a straight line. So when these sellers get stopped out, they buy their order back. Their stop loss is a buy stop. So we need to take it to the buy stops. So this is why there's going to be buy stops in this area over here. And we take it to them. And then once we exit the trade, we close our position, our buy, by what? Selling to who? Those people who have buy stops up here. And then they continue to trade, or, you know, they end up getting stopped out because they're looking to do breakout because we've broken out of this high. They're looking to do breakout buying. And sometimes price will do this, come back down, they get in now, let's go, and then boom, hit the stop loss and they're done. So this is the theory behind it. I know this looks crazy, but listen, it looks crazy, it looks mad, it looks like, what on earth is he doing? I know this looks crazy, but if you are able to understand all of this right here, I'll tell you, your whole trading game will change. This is the trading style, the trading strategy that changed my life, changed the game for me. And this is how I'm able to catch sniper entries. And don't forget here, when it comes to the sniper entry, there needs to be some kind of POI here, something that you can utilize and say, hey, if price dips beneath this low, it needs to tap into something before going higher. So what is this POI? This is what we're going to be looking at today, the POI and the entry. POI. This looks crazy to some. I'm pretty sure we just, you know, screenshot this and then sent this to someone, They'll probably be like, this guy's crazy. This guy's crazy. Don't know what he's talking about. All kinds of mumbo jumbo here, all kind of formulas in here. Guys, it's straightforward. If you just listen to what I said, you would understand exactly what's going on. So now, guys, we're going to move on to the trade that I took, and I'm going to break it down for you guys using this exact same philosophy. All right, guys, so it's a new week, and we've opened up with a massive gap. When it comes to the TTTM style of trading, what you want to do is you're not just going to buy from here. Why? Because there's a massive gap here. There's no trading in this area here. And so there needs to be some kind of trading within this gap before going long. What I will do then is this. I would be expecting price, like I said, price is going to accumulate, go sideways. If I'm bullish, I want it to drop first before going long. And also, I mentioned when price is going higher, people are going to be looking at this as some kind of, we're breaking above a high now, let's look to go long. But it's way too early. You don't want to get caught out and start losing money. You want to wait for a dip first. And this was one of the hardest things for me to understand, especially as a beginner trader, is whenever I saw price like this, I would just expect price to fly, to go. I wouldn't expect it to come back. So I would FOMO into the trade, jump into the trade, and then end up losing because for the most part, it came back. There was sometimes it never came back. I believed in the sometimes over the majority of times. So this is why I always say, don't just jump in. If you miss it, you miss it. Look for price to come back first. So now is how deep would you want it to drop? So if this is going to be my POI, I'll show you is this, is the gap. This gap here is a massive POI. Oh, so what do you do then when price taps into this? Should we just jump in? This gap was how large? This gap was about 65 pips. If you're having a 65 pip stop loss, I believe that's a massive stop loss even for swing trading anyway, but it's just too big. That means for you to gain 1% on your account, you have to make 65 pips. I'm not about that. So what I'm going to do is I'm going to look to refine this area here, refine the gap. So I'm going to bring up my fib tool that would allow you to mark up 50% of the area. And so for me then, I want to see price drop down into 50% of the area before going long. Normally gaps aren't this huge, but for this scenario, for this case, when gaps are large like this, I can utilize 50% of this area here and look for a sniper entry around here. Not saying it's not going to fill the full thing. I'm just saying this will be my first POI. My second POI will come from the lowest part here. Sometimes when the gaps opens, they're like 20 pips or so. Sometimes they're 5 pips. You're not always going to be getting 65 pips. I'm always anticipating price dropping first before the rise. That's that TTTM style of trading. To drop, catch it from the POI, from the very T, and then go. And then what I like to do as well is, just because sometimes they like to be really cheeky, they might not come right to it. So I like to be 1 or 2 pips above this, roughly about 1 pip above really, and then look to take it long. So let's go ahead and hit the play button. All right, so guys, we're gonna stop it right here. We come right to this area here. Roughly about 1.0447 was where the 50% line is, and this low of this candlestick here came to 1.0448, 1 pip above. So this is why I do it, just in case they do something like this. I'll be in from here, no drawdown, because I know if they close beneath this 50% mark, they're most likely going to be getting down to these lows, the lowest quarter of this gap. So then you need to have a POI. So we get the dip into the POI. We know where the money is because we've run that liquidity to the downside. Where's the rest of the money? The rest of the money is above this high. We've discussed how deep it's going to drop. We need to find out how deep we're going to run into the money, into those buy stops. So we've taken out all those sell stops, all the stop losses beneath here. Now we're in the trade. We've paired up with their sell stops, with buy orders. And now we need to take it to willing participants. Who are those willing participants? Those buy stops. The people that do breakout buying up here who have buy stops ready to take price higher. And above this area, we need to look at where's the money. Look at the inefficiency over here, where there's only sell candles. See, this here is even trading, where there's buying and selling, buying and selling, buying and selling, buying and selling. The moment you see something like this, it means that there's uneven trading and there's inefficiencies in the market, and price will need to come up and clean up this inefficiency. This is where I'm looking to target. I'm looking to target within this fair value gap over here, within this inefficiency. Okay, so let's expand it to the right. So we're in here. My stop loss is beneath the 50% line. I roughly about a 5 pip stop loss. Okay, let's go ahead and put this on. 5 pip stop loss. And I was looking to take it to these highs. So this here is a 5 pip stop loss. This is a 65 pip move and a 13R trade. So this was the aim. So this was the target. And so this is why you always have to have, it's like you have to have 2 points of interest. One from where you want to enter and another one for where you want to take price. You can see we run to that area. There we go. Let's pause it right here. So we get back to this area one more time. over here, you have a little sell candle. This sell candle here, people are going to use as a rejection candle. They're going to use it as a rejection candle to thinking that price is going to go down to the downside again. Then they're going to look to take price lower. We're not interested in that. And don't forget, look, I've even forgot to mention the times. Look at this. This was that Asian session. You guys know in Asia, price normally accumulates. Okay, so you're utilizing that. In London, we begin to drop down into the POI and then begin the rise. Then in New York session takes over now, and then we begin the second rise. Between those two sessions, there's a bit of consolidation, and then we get to our point of interest. And this is where you have to take partials. If you're an intraday trader, this is where you're taking partials. Scalpers should have taken partials the moment price ran this high. At least taking partials or closing off your position. That's what you need to be doing up here. And it's a beautiful move. You just caught a 1 to 13R trade. You just caught a 1 to 13R trade. What more do you want? This is not normal. Just so you guys know, the Black Friday sales are still on. You can go forth and get courses or the mentorship for 50% off. When you're able to utilize this and understand this, I know it looks like a whole bunch of what on earth is happening here. But this here is exactly this. Exactly all of this. This looks a lot cleaner than this. But if you're able to understand this, understand what exactly is happening when price is doing this, what exactly is happening when price is dropping, why it stops here, then why it's rising and where it's rising to, and why it's stopping here. If you're able to understand this, then you're able to catch moves like this. Even if your stop loss was a 10 pip stop loss, let's move it, increase it to a 10 pip stop loss. There still would have been a 1 to 6R trade, guys. You don't have to catch a small stop loss like me. You don't have to catch a small stop loss like me. Trade a stop loss that you're comfortable catching. Let's go down. Even your stop loss was halfway down. That third quarter of this, that's one half. This is a third quarter, and then this is the fourth quarter. Even if it was down here, 17 pip stop loss, that's still a 1 to 3, 1 to 4R trade right here, guys. So you don't have to do it like me. You don't have to catch it. And just because you see me catch a small stop loss doesn't mean that you guys need to go forth and catch a small stop loss. You guys can go and trade how you're comfortable. How are you comfortable trading? This is a huge gap. This is a huge gap. Hence why the pips are just so much. Normally gaps are not this big. A 10 pip stop loss might cover the whole gap. Like I said, trade how you are comfortable. But this is how I was able to catch a sniper entry. And this setup is not going to happen every single day. It might happen once a week. It could happen twice a week. You don't even need to catch it from down here. You can catch it on the way up. You can catch it in an NY session if it's not reached the POI yet. You see this, look, equal highs over here. People thinking this is a confirmation for people to sell. This is liquidity for me. Price is drawn towards the money. So I'm going to look for price to continue that run up higher. So this is why I did not close off the trade when price started dipping. I knew they create equal highs and they start dropping after running out a down close candle high. This is a sign we're going to be going long.